Hello everyone, welcome back to my Next Gen YouTube channel. Ever heard of companies going public? It's like stepping onto a bigger stage, a grand entrance into the world of stock markets. We call this initial public offering, or IPO. It's a big deal for companies and investors alike, so buckle up as we unravel the exciting world of IPOs. Think of it like this: a company decides to sell a piece of itself to the public. These pieces are called shares. People buy these shares, becoming part owners of the company. That's an IPO in a nutshell. The IPO advantage. Going public is a strategic move for companies. Why? Let's break it down. Firstly, IPOs are a fantastic way to raise capital. Companies need money to grow, expand, and invest in new projects. An IPO provides a massive influx of cash. Secondly, going public distributes risk. When a company is privately held, the owners bear all the risks. An IPO spreads the risk among thousands, even millions of shareholders. Thirdly, IPOs offer an exit strategy for early investors. Venture capitalists and angel investors who funded the company in its initial stages can sell their shares during the IPO, reaping significant returns. Finally, going public increases a company's visibility and credibility. A listed company enjoys greater brand recognition and public trust, attracting more customers, partners, and investors. Meet the IPO architects, merchant bankers. Now let's meet the masterminds behind every successful IPO merchant bankers. These professionals are the unsung heroes of the financial world. These financial wizards act as intermediaries between the company and the public. They bridge the gap, ensuring that the company's shares are presented in the best possible light to potential investors. They're like the conductors of an orchestra, ensuring every instrument plays in harmony. Just as a conductor brings together various musicians to create a symphony, merchant bankers coordinate different aspects of the IPO process. Merchant bankers wear many hats. They are strategists, analysts, and negotiators all rolled into one. They conduct thorough due diligence, scrutinizing the company's financials and operations. This involves a deep dive into the company's books, ensuring everything is in order and there are no hidden surprises. They prepare the all-important listing documents, a comprehensive report about the company and its prospects. This document is crucial as it provides potential investors with all the information they need to make an informed decision. Determining the right price for the shares is crucial. It's a delicate balance between making the shares attractive to investors and ensuring the company raises the desired capital. Merchant bankers analyze market conditions, assess investor appetite, and advise on the price band, the range within which the share price is expected to trade. They use their expertise to gauge the market's pulse and set a price that reflects the company's value. Finally, merchant bankers organize roadshows. These events are meticulously planned to showcase the company's strengths and future potential. These are promotional events where company executives pitch their story to potential investors, drumming up excitement for the IPO. It's a chance for the company to make a compelling case and generate buzz in the investment community. The IPO playbook, from pitch to listing day. The IPO process is like a well-choreographed dance, with each step meticulously planned and executed to ensure a successful outcome. Each phase is crucial, leading up to the grand finale listing day. It all starts with the company appointing a merchant banker who plays a pivotal role in guiding the company through the IPO journey. Together, they draft the red herring prospectus, a comprehensive document that provides potential investors with essential information about the company's business operations, financial health, and the specifics of the IPO. This preliminary document is crucial as it outlines the company's business model, financial statements, and the details of the IPO, including the price band and the number of shares being offered. Next comes the SEBI approval, a critical step in the process. In India, the Securities and Exchange Board of India, SEBI, acts as the market regulator, ensuring that the IPO process adheres to strict guidelines and regulations. SEBI's role is to ensure transparency and fairness, protecting the interests of investors and maintaining the integrity of the market. Once SEBI gives the green light, the IPO dates are finalized and the company can proceed with the next steps. The IPO opens for subscription, allowing investors to apply for shares within the stipulated price band. During this period, investors carefully review the prospectus and decide how many shares they want to apply for based on their assessment of the company's potential. The excitement builds as everyone waits to see if the IPO is oversubscribed, which means it has received more applications than the number of shares available. An oversubscribed IPO is often seen as a positive indicator of strong investor interest and confidence in the company. Finally, listing day arrives. The company's shares make their debut on the stock exchange, marking the beginning of its journey as a publicly traded entity. The opening price is determined by supply and demand, and trading begins with investors eagerly watching the stock's performance. It's a day of celebration and anticipation as the company embarks on its public journey, with hopes of achieving new heights and delivering value to its shareholders. Section 5, Beyond the IPO, Life on the Stock Exchange. The IPO is not the end, it's just the beginning. Once listed, the company enters the secondary market where shares are traded among investors. The company now has a responsibility to its shareholders. It must regularly disclose financial information, hold shareholder meetings, and strive to increase shareholder value. The stock price will fluctuate based on various factors such as company performance, industry trends, and overall market sentiment. Investors will buy and sell shares based on their assessment of the company's future prospects. The company can raise further capital through follow-on public offerings. It can also issue bonus shares or announce dividends to reward its shareholders. Life after an IPO is dynamic and full of possibilities. Section 6, IPO lingo, decoding the jargon. The IPO world has its language. Let's decode some common jargon. When an IPO receives fewer applications than shares offered, it's undersubscribed. This may indicate weak investor interest. This is the opposite of undersubscription, signaling strong investor confidence. When an IPO is oversubscribed, shares are allotted proportionally to applicants. This allows underwriters to sell more shares than initially planned if demand is exceptionally high, helping stabilize the stock price post-listing. Here, the company sets a fixed price for its shares, as opposed to a price band. This is the range within which investors can bid for shares. The final IPO price is determined based on demand within this band. Section 7. Recent IPO action, a glimpse into the Indian market. India has witnessed a remarkable surge in IPOs in recent years, reflecting the dynamic and evolving nature of its economy. The Indian market has become a hotspot for new public offerings, attracting a diverse range of companies from various sectors. Let's delve into some recent examples to understand this trend better. This tech startup, specializing in cutting-edge artificial intelligence solutions, went public on listing date with a price band of price band. The company has been at the forefront of AI innovation, developing solutions that are transforming industries. The IPO was oversubscribed multiple times, reflecting the immense investor enthusiasm for the company's growth prospects and the potential of AI technology in the future. Another notable example is a leading player in the renewable energy sector, Company B. Its IPO on listing date with a price band of price band also drew significant interest from investors. The company is known for its innovative projects in solar and wind energy. The company's strong focus on sustainability and renewable energy solutions resonated deeply with investors who are increasingly seeking long-term value and environmentally responsible investments. This pharmaceutical company, specializing in the production of generic drugs, launched its IPO on listing date with a price band of price band. The company has a robust pipeline of affordable medications that cater to a wide range of health conditions. The IPO received a moderate response, indicating a more cautious approach from investors, possibly due to the competitive nature of the pharmaceutical industry and regulatory challenges. These examples highlight the incredible diversity of companies entering the Indian IPO market. From tech startups to renewable energy firms and pharmaceutical companies, the varying levels of investor response underscore the dynamic and multifaceted nature of the Indian economy. Section 8, IPO Insights, Key Takeaways. So there you have it. a crash course on IPOs. Remember these key takeaways? IPOs are a way for companies to raise capital, distribute risk, and enhance their public profile. Merchant bankers play a crucial role in guiding companies through the IPO process. The IPO process involves several stages, from appointing a merchant banker to listing on the stock exchange. Understanding IPO jargon is essential for navigating this exciting world. The Indian IPO market is vibrant, with companies from various sectors seeking to go public. Section 9. Stay tuned, the market adventure continues. That's a wrap on IPOs for today. But our market adventure doesn't end here. Next time we'll dive into the exciting world of secondary markets, where the real trading action takes place. Stay tuned for more market insights and investing wisdom.